Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. I'm all alone today. I am so lonely. I'm lonely. Dee had to take the day off today. She is traveling, so it's going to be me here by myself, giving you the lowdown of what to expect today in markets. And so I thought this morning we would talk about a subject that I absolutely hate talking about: pinned markets. What is a pinned market? How do we read it? And why am I now this morning beginning to think that maybe we are seeing a pinned market here today? Well, a pinned market is essentially when the market is being held in a place over a multiple day basis. So intraday, on any one particular day, the market can make large moves, but it will generally within a day or two come back to a particular level, okay, sort of at the center of the range. That is when a market is pinned. Now, I was feeling yesterday like the market was pinned, but I didn't want to admit it. I didn't want to say it was so because I hate these pins so much, and they are so common now in the markets that I just didn't even want to admit it to myself. But this morning when I opened up the chart, I had to admit that the market is pinned. So why do I believe the market is pinned, and where do I think it is pinned? So when I say pinned, we're going to give an exact level. We're going to say, like today, I would say it's probably somewhere around 58, 88. There's nothing, particular about that number. It could be a little higher, it could be a little lower. It's really more of just a general range, okay, where the market just can't get away from a certain area. Why do I think the market is pinned? Well, we had momentum to the upside, okay? That momentum to the upside came to an end. The market made new all-time highs. That came to an end. We got a break of the momentum the next day when we made lower lows, but we closed at the end of that day with a spike down. This is a very important reference, okay? This is something we don't want to ignore. Spikes are a potent signal of what to expect moving forward in the market. Okay. And the general idea with a spike down is it's bearish. It increases the odds that the market wants to keep going down in the days ahead. Now, if you open inside the spike the next day, that is the sign you should be bearish and the market is going lower. If you open with a gap down, it's even more bearish. And if you open above the base of the spike, that is the least bearish scenario to see. Well, we got that spike down. We opened the next day inside that spike, and what did the market do? It went up. It went up all day. And so that is not normal behavior of a market. Generally speaking, the only time you see that happen is when a market is pinned, right? When a market is pinned, it will do that. It will create spikes at the end of a day and then reverse the opposite direction the next day. So whilst I didn't really pay a lot of attention to it when it happened on that particular day, that was the first sign that this market is pinned. Okay. The next sign that the market is pinned is that we had this massive, huge gap up yesterday and we did not get a gap and go. Generally speaking, when you get this large of a gap, you will either just rotate at higher prices, or you will continue the momentum to the upside. We did not get either of those things. So that's two things in a row where when what should have happened, opening in the spike should have taken the market lower, opening with a massive gap up should have led to sideways or higher, the exact opposite happened. Well, when the exact opposite happened, what did the market do? It came right back to this large node of liquidity that we see right here around 58, 80, 88. Okay. What do we see there? A closing price. What do we see the very next day? A closing price at exactly the same level. This is the next sign that a market is pinned. When you start getting opening and closing prices that perfectly line up with each other over and over again, same thing with if you start to get POCs that are lining up over and over again, or highs and lows of certain days that are lining up over and over again at exactly the same levels. If you start to get those exact reversals, those exact opens, those exact closes, that's a pinned market. That's a market that's being artificially held in place. Humans are not this exact. If this was just humans making bets, they think the market's going to go up or down, it would not close at exactly the same level 2 days in a row. That's just not how markets work. Okay? So all of that in combination tells me that the market is pinned. The last signal that the market is pinned is that if this wasn't a pin, if this was just normal rotation where a market was just, balancing, just a little tug of war, the two sides are competing, after the look above and fail yesterday, we should have been heading down towards the previous day's lows from Wednesday to Wednesday's lows. Okay. What did we do in the overnight though? We're right back up at the upper end of the range. Again, that is a thing you see when the market is pinned. Okay. So this is how you know a market is pinned. You get these signals one after another. The market is in balance. It's reversing where it shouldn't. Spikes aren't playing out where they should. You're getting exact references lining up over and over again. So now we know the market is pinned. Well, what is our carry forward as intraday traders when we see a pinned market? What do we do with that information? Well, two things. Okay. First off, we are very cautious with our trading because in pinned markets, the most reliable thing is you can't trust anything, right? The market will continually make you think it's about to break higher, it's about to break lower, and then at that exact moment, it'll reverse. And then when you're convinced, okay, I was wrong, it's not going higher, let me get short, that's when it reverses again. Okay? It will tend to stay stuck in very tight ranges. It will tend to stay stuck in sort of exact areas and then instantly break away from those areas and either come right back or instantly break away and never come back. And so all the moves where the market is making 5, 10, 15 point moves are happening instantly. And you either have to be in the trade and you're lucky or you miss it. These are what pinned markets do. So step one in trading a pinned market as a day trader is recognizing, one, you want to be more of a scalper that day. You do not want to fall in love with trades. You also want to be more cautious with your entries. And then the last thing you can look for in a pinned market is the market will often reverse at exact levels. There's a trade setup that I call the bought reversal trade, which is essentially getting long or short at the high or low of previous TPOs. Because when the market is being artificially controlled like this and being forced to stay pinned in this range, it's being done by computers. Those computers have to have exact references. For reversals, they will often use the high and low of 30-minute candles. So taking all that information into account, let's just look at the last few days, right? Let's expand out these profiles, recognizing that the market is pinned, and ask ourselves, how would this have been if we were trading, right? E period low reverses at the A period high. G period low reverses at the D period high. H period low reverses at the E period high. I period low reverses at the B period high. Over and over again, right? What about yesterday? H period high reverses at the G period and E period high. I period high reverses at the G and H period high. J period high reverses at the B period high. What about down at the lows? K reverses at the J low. Okay. So this is the way I will be thinking about trading from now on until we break away from this pin. And I will tell you when we have broken away from the pin. But until that day, and it probably won't be today, it'll probably be next week. When that day comes, I will change my mind. Until then, I'm going to be cautious with my entries. I'm not going to force any trades. I'm not just going to enter a trade because I feel like it, because I think I know what the market is doing. I'm going to be absolutely certain that I know what the market is doing before I enter a trade. I am not going to fall in love with my trades. Rather than getting into a trade and kind of saying to myself, let's see how far the market can push it, I'm going to have very specific take profit levels that I'm watching and I'm saying to myself, I want to take profits at this level. So whereas, for example, I'll give you a trade setup. Let's say the market opens here in about 20 minutes. This is the overnight high. The market pushes above the overnight high and it comes down and it finds support. Normally, I'd be targeting a move up towards the all-time high or the previous day's high. Today, I'd be taking partial profits at the volume point of control from yesterday, and then the rest of my profits at the high from the 15th. Okay. Does that mean I don't think the market can get up to the all-time high? No, it absolutely can. If we push above yesterday's high today and we find support, we can go make a new all-time high. But am I going to sit in one trade all day waiting to get up there? No, because it's probably going to reverse and reverse and reverse and reverse and reverse and reverse and reverse 50 times before it ends up getting up there anyway. So let me get long because I have a good signal. Let me take some profits. Let me re-entry. Let me take some profits. Let me re-enter. Then let me go for that bigger move, right? That is the way to trade a pinned market. That is how I'm thinking about things today. Also, later on in the day, you can't do it first thing in the morning, but by, let's say, noon, right? 11:30, noon, 12:30, 1 p.m., I'm going to start using previous TPO highs and lows as potential levels to reverse the market. Okay. So if let's say our range, this is the high and this is the low, this is the high, this is the low, this is the high, this is the low. Let's say this is where we're at later on in the day. I might be looking to go long at one of these lows with 1 point of risk, 1 point below the low, or short at one of these highs with 1 point of risk. Okay. When I get in those trades and they start to work in my favor, I am not going to fall in love with them. I'm going to instantly move my stop above my entry and trail my stop as the market makes its way. Probably I'll end up getting stopped out. If not, I'll pick a take profit target somewhere within the range based on the volume profile from the day throughout the day so far. Okay. I now have clear signals from the market that the market is pinned. I'm going to trade it as such. I forgot to close off the survey, and it is now saying that 40% of you, 47% of you are looking for a sideways move. To be clear, even when the market is pinned, it can go up all day or go down all day. It can do that while it's pinned. It will just do it in a nightmarish way that's very hard to stay in trades, and it'll come back the next day. But it can get momentum one direction or another. Now, at this moment, which direction do I think it's going to get momentum today? Well, first off, I think we're going to get a lot of chop. We are inside the previous day's range, inside the previous day's value area. So I would say pretty much anywhere between 59.10 and 58.82, anywhere between this range is pretty much a chop zone. It's going to be a nightmare up in here, at least for the first hour of the day. They could reverse anywhere. Tempo can change anywhere. It can make you think it's going up, and then all of a sudden it just crashes lower, make you think it's going lower, then all of a sudden it reverses back up. It's going to be very choppy for the start of the day today. If we start to build support, then we can make new all-time highs, and I'd be happy to go long for that. If we can start to build resistance, then we're heading back down to the lows from 2 days ago, down here around 58.33, and I can get short for that. But inside that chop zone, it's going to be tricky. Okay. Those of you that are in the brigade, we will talk about each step of the process along the way. I'll walk you through what I'm seeing and what my predictions are to carry forward. But today is going to be a messy day. So buckle up, folks, and get ready for it. I'm talking about a messy day. Hey, okay. So am I long or short? Am I biased one way or another? I am not. I'm slightly more biased long, but really I'm just looking to watch what the market does for the first hour and then decide what to expect from there. Are there any questions on any of that from the chat? I'm all alone today. I have no co-host to make interesting conversation. So if you guys don't have questions, that'll be all I have for you. Any questions at all from the chat? Good morning to Laura, Will, Willie T, Trevor, Percy, Mr. Knife Art. He says, what does it mean pinned? So pinned is just a word I made up to try to describe this behavior. And it basically just means that it's a moment where the market is balancing. So it's going nowhere over a period of days. It's going sideways, but it's not real balance. Real balance tends to move in a very predictable way. It moves from one end to the other, to the other, to the other, to the other. And sometimes it takes like 2 or 3 days to get there, or it goes straight in one day, but it moves from one end to another. Whereas pinned, it doesn't have to do that. It can be totally random, like this morning, right? After yesterday's look above and fail, if this was normal balance, we'd be going straight to the opposite end. We're not doing that though, because we're pinned, right? Once we look above and failed, we came back to the pin. We spent all night at the pin, and now we're moving away from it. So we can move all the way up to new all-time highs before we come back to the pin. We can reverse and go lower. We can spend all day at the pin. That's the real douche that is a pinned market. You just really cannot predict because it's artificial intelligence. It's bots artificially making the market moving around, knowing that for the next however long it'll be. I can't tell you how long it'll be. The last time it was 2 fucking weeks it was pinned. That's what we had down here. For 2 weeks, this market was pinned, and this was the range right here. And it moved down, and it came back, and it moved up, and it came back, and it moved up, and it came back, and it moved up, and it made you think it was going to break, and then it came back, and then it went down, and then it came back, and then it went down, and it came back. Made you think it was going to go nowhere, went up, came down, went up, and then finally, we broke away. Okay? So it could be another 2 weeks, for all I know, that we're going sideways in this range. But I can tell you that strategy that I discussed about being cautious with entries, about taking profits quickly, and about using exact references as areas to get long or short, only risking a single point to enter a trade. If you go back and you map out these 2 weeks, it would have been an excellent strategy to make money for that entire 2 weeks. Doesn't mean it would have been easy to trade, but it would have been a very good system for how to approach markets. So that's what I'm thinking right here, right now, right here, right now. Percy says NQ same. Let's take a look at the Q. The Q. What will it do? It do. Yep. Same thing for the Q. Q a little harder to read here. Yeah, the Q is tough, man. I can see a trend line building in here. Don't know if you can trust it yet, but that could make this basically a channel over the weekly. But you could also make the argument that it is horizontal balance. Right in here. And that's your pin. 2450. So both markets are opening inside the previous day's range today. Both markets were looking for chop first thing in the morning. However, the NQ is already up at yesterday's value area high. So if the market opens and it gets above the overnight high today on the NQ, that is a much more probable trade to get to the previous day's high. So the exact same example I just went through on the ES, and I said I'd take profits quickly and I wouldn't stay in that trade. I would stay in it on the NQ because support above the overnight high, first you got to get above, then you got to turn it into support. But if you get it, is a good trade to test yesterday's high because we're so close to it and it was a weak high. On the Q. Otherwise, expect chop and grind and rotation inside yesterday's range. SC, good morning to you. Zahir, everyone just wants to see the NQ. Well, there you go. Red Pulse says, now I don't feel so bad about my trades yesterday. Thanks. Yeah. That is the thing about pin markets. They suck for day trading. They really suck. And so you gotta know when to recognize that it's happening. And as soon as you do, change your mind, put your mind in pinned trading mode, because otherwise you'll go crazy trying to make sense of these markets. Design Knob says, I just called the FBI on the pin. Good luck with that. They got the FBI in their pocket, my friend. Ross says, how about YM? I don't have that on profile. Ooh. So again, I would say on the Jones, it's a little bit more bullish because you had a balance area right in here and you broke out of that balance area yesterday. So it's a giant if they can turn that balance area high into support today, that's bullish for continuation higher. If they can't, it's bearish for a rotation back down to the opposite end of balance. So I would say that balance area high is, pretty much the overnight low. So 43,406. Basically the overnight low. So if they get below the overnight low on the Dow Jones this morning, you want to be bearish. If they get below and they pull right back up, you want to be bullish. If they can't get below, you want to be bullish because this is a breakout of balance, which could lead to momentum. Just like this one. Balance. Broke out. Back tested. Excess to the upside. That was your breakout day. This could become your back test day, which would be a reason to be bullish if it holds. If it holds, what happens to that overnight low? Design Knob says the Russell seems the same. Dabao. Says the NQ has more than 2 TPOs of excess. Why would you say poor high? Weak high, yes, because it has only one TPO. This is the way I have my settings set up. It has only one TPO above the opening price. So yeah, you have a good selling tail at the high of the day in terms of excess for that. But when the market opened, it didn't have good excess first thing in the day. It opened and it didn't even get a chance to go up at all. It immediately got smacked down. So who are those sellers that smacked the market down first thing yesterday? Where are their stops? Boop, 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 boo. Right above that high. DNK says the put call ratio for the SPY is 3.4609. Market makers are not going to let it go down. Not for today. Well, then great. I got no problem with the market finding support above the overnight high and then heading up to test the high from Wednesday. If we get support up there, I got no problem with testing the all-time high. I'm just not going to make that assumption yet. I'm going to wait and see what happens because even if the market makers don't want the market to go down today by the end of the day, they will have no problem with it going down to get everyone short and then whoosh, bringing it right back up. Oh boy, they won't mind doing that at all. All right, guys, 5 minutes to market open. I am going to say goodbye. Thank you so much for joining me. If you liked the stream today, please take a moment to push that like button, okay? I need some encouragement. I'm all alone. I don't know if what I'm doing is good or bad. And the only way I know is if you push that like button or if you don't. So let me know. All right, thanks a lot, guys, and we will see you Monday morning on the Bookmap stream. Members of the brigade, let's set sail.